Shut up and sit down.
What is going on? Welcome back, guys. Episode 21, the gluten-free Jason Bessing here. Welcome to the Rebel Trading Group. This is a solo episode. My boy Nathan can't join us today. He's actually over here in my neck of the woods, over on the east coast of Florida. So he's here. He's celebrating his mother's retirement. She was smart, put money away, and is retiring. I think he said something along the lines of like 13 years early. So good for her. Congratulations. I hope you guys have a great time. I can't wait to get back on the podcast with you, and I really hope I can make it out there tonight and see you guys. But if I don't, congratulations. I'm so happy for you. I'm so jealous. But that's what it's all about. It's all about putting that money away. It's about staying disciplined throughout the years, long-term investing, build that nest egg, and then in the end, you get to purchase your freedom. You never have to work again. Oh my God, that's what we all want. Who the hell wants to work anymore? Very few people in this country actually get up out of bed and look forward to going to work. Even those who say oh, I'm a nurse because I love it. I love helping people. Okay, they love to help people. That doesn't necessarily mean that they like to get up and have coffee, go sit in traffic and have to put gas in your tank and drive and sit in traffic and go to the hospital, work for 12 hours, sweat, get blood all over you, go home, shower, do it all again. Not everybody likes doing that, so put the money away, work hard, buy your freedom. Unless you just want to work forever, then go for it. Whatever makes you happy. Sorry about the ramble there. I just wanted to come out swinging. Just like the markets did today. June 1st, we came out swinging in this market. Dow jumping up 200 points. NASDAQ up 112 points. Pretty good move on the NASDAQ. And then the S&P up 29 points. Nice, solid, strong move today. There's a lot of interesting news out this morning. For example, Donald Trump said... He tweeted that he was excited to see Friday's unemployment numbers. Of course, he must have had some insider information on that, but non-farm payrolls came in well above expectations. I believe it was 288,000 on payroll, and only 233 were expected, somewhere in that. I don't have the exact numbers off the top of my head, but that was another leading indicator, and we just kept shooting up all day. It was a great... It was a nice little day, especially for those on the NASDAQ. Bitcoin still in that lull, hanging out at $7,438. Just still in this lull. It's starting to get a little sad. I hope that she can start to pick up a little bit because she just seems to keep going down and down and down. I wonder if all the hype is done. Are we done with Bitcoin? Is it gone? The easy money's already been made, but can that rally happen again? Can we push back to 20,000? Nobody knows. Nobody fucking knows. I wish I knew. Personally, I think it's here to stay. And in my opinion, I don't think that the run is done. I think that it has the chance to go to 20, if not 50,000 again. The only way it's going to do that is if there's going to be a demand for Bitcoin. And I feel like it'll slowly start to come as the years go on. But for the time being, she's just in this slump. So if you believe in cryptos and you are that rebel, you are like the hardcorest rebel fucking trader out there, then go for cryptos. I think this is still a good time to keep buying more. But anyway, that's my own personal opinion. Unfortunately, obviously, no market news with Nate today. Sorry, I had to throw that in there. But no market. I already kind of threw in that the economic numbers came out better than expected today. Not much else going. It was just a strong buying day. Tensions eased. Political tensions eased over in Europe, especially in Italy. And every time I read that, I always wonder, what the fuck easing? Did they actually, get together and, okay, let's work out this, let's work out our differences. I think it's time to work out our differences. Or does that mean that the news isn't talking about it anymore? I think it's the latter of the two. I think that they put, tensions ease just mean that nobody cares anymore. It's not important anymore because there's now new news. Donald Trump tweeted something. So, anyway, very strong day. I don't really have a topic today. I really just felt like podcasting. It's Friday. It's June 1st. It's payday. I just felt like doing a cast. So today, what I did want to talk about is patterns. Remember patterns? Remember when you were like in high school? Not high school. God, I hope you wouldn't do this in high school. But like in kindergarten, and it'd be like, here's a square and a circle and a square. What's the next one in the pattern? I always thought that those were silly, and I just like, what, really? This is why I have to come to school right now to sit here and do this? But yes, patterns and trends are your friend in this trading game. And I'm not talking market gyrations necessarily. That is where us traders make all of our money, is on that buying and selling and the up and down daily movements of stocks and equities. Stocks, futures, all that stuff. We're just buying and selling on those gyrations. The patterns I'm talking about, though, is we mentioned it in the last episode just a little bit, but I'm talking more of things that seem to have a relationship to one another, and you kind of pick up patterns on your own. Everybody has their own trading style, their own trading journey, their own trading goals, the things they like to trade. Everyone's very unique, and that's what's beautiful about this trading game. But you'll notice when you get into that style and you find your method, you'll start to notice patterns. So, for example, one of the more easy, like, hit the nail on the head patterns would be if the market goes down, gold goes up. That is almost always true. Notice I said almost because I've seen markets tank while gold tanks and silver tanks. And treasuries. I've just seen sell-offs all in one day of everything. So it tends to be true. So when the market goes down, there's things that gold tends to go up. I also notice that when the market goes down, utilities tend to go up, and the inverse is true. If the market goes up, utilities go down. And the thought process of this is the flow of money between the bulls and the bears. Okay, everybody's selling. They think, I don't like this headline today. I'm going to put my money into gold. So of course that causes more buying and pushes up the price of gold, and that selling out of the stock market pulls that index down. So it all has that direct relationship. That's one of the more nail on the head answers, or examples, if you will. One personal one that I like, and you can see if this tends to be true for you too. I'm actually going to look and see if it happened today. When the market goes up, I've noticed Disney, Walt Disney DIS, tends to go down. And it actually happened today. It was a very modest day. Disney only down like 11 cents. But it sold off all day while the market went up. And I've noticed that this almost, keyword almost, always happens. So I use that to kind of profit. Whenever you find and identify a pattern, you need to exploit it to its fullest potential. If it works for you, ignore everything else and exploit that pattern. And that's exactly what I've done with this. I've bought puts on Disney when I see the market go up, and they work. And I've also purchased Disney when I see that the market is going to go down. It almost always works. There's many other patterns that are out there. And you'll identify them, and you'll actually see them as you progress through your trading journey. And uh, like I said, exploit that pattern. If it works, who cares? Use it and abuse it. It is there for you to take. And that's just kind of what I wanted to mention, because it was something that we had mentioned in the last episode just a little bit. I actually kind of misconstrued one of Nathan's questions, but yeah, when you find those relationships between two different types of securities, it can be a goldmine of opportunity for you, and you will find your own personal ones, like I said. So I just wanted to touch on that. Find patterns, exploit them. Of course, if you are a technical analysis trader and you look at the charts in order to determine your trades, which I hope you do. I've done it without looking at charts and had success, but that's because I know how certain things trade exactly. So I say, oh yeah, the price is down like this. Okay, I'm done. I am selling. Or, okay, the price is moving up. Okay, yeah, I'm buying. Just because I know, Ford is one of those examples. I know exactly how Ford trades, so I can tell you every day if it's a buy or it's a sell, just by where the price is at. Anyway, that's besides the point. If you are a chart user and abuser, you'll obviously find those key technical patterns that work for you. I like to find double, sometimes triple bottoms, and that is very simply when you see on a chart, more specifically a candlestick chart. You can do it on a line chart. It's just not accurate because it doesn't give you the volume, and it doesn't tell you that the range it traded in. It just tells you the closing price like every 10 minutes or so. But if you pull up that candle chart and you look for triple double bottoms, and what that is you'll see a chart move up and down and up and down, and that bottom out where it tends to stop selling and start going back up, you'll see that a lot of the times it will hit that price several times. So for example, if Ford is trading, and I always like to use 10 as an easy number, so let's just say it's $10 a share. Sometimes you'll see that it'll hit like $9.94, and then it'll pop back up, go to $9.97, $9.99, $10.02, and then it might drop back down $9.94, and it puts in that floor, that level of support, that area of demand. And when you identify those areas and those double, triple bottoms, it's usually a safe bet to say, hey, when it hits $9.94, people start buying. So that's a good price to get in. And the same is true. There's also double, triple tops, which put in ceilings or areas of supply where the sellers are ready to get out. So on that example, it might be at like 10.15 or 10.11, 10.12, somewhere in that ballpark. You'll see, okay, it ticks up, it hits 10.12, and it comes back down. It comes back to 10.09, then it trades 10.07, pops back up to 10.12, and it drops back down. So that is another very simple, easy pattern that you can use and exploit and identify. It also depends on like the time frame and frequencies that you're looking at. You'll see doubles and triple bottoms. They happen within like 10-15 minute ranges. They also happen within minute ranges, where very small movements hit, and then you see those waves. It hits the bottom, bounces up, hits the bottom, bounces up. So you decide to get in on that, maybe that third, maybe even fourth time. Technical analysis definitely tends to be true. It tends to work out in your favor, but it's not always an exact, true 100% thing. You don't ever look at a chart and say, well, it double and triple bottom at 990, so that is where you have to buy it. It might be a good idea to buy it at 990, but what other indicators are supporting that statement? Do the company's valuations and fundamentals, do they warrant a 990 purchase? If you're like a day trader, you might not even look at that. You might solely look and identify those patterns. Maybe even if you're a swing trader, you look at those weekly, daily, monthly patterns, and you can identify them. I remember when I first started trading, in 2016. I started February 2016. I started to actually get into it and start to understand things truly maybe about 8 months after that. Started to get education, did my research, podcasts. And one thing I did as a swing trader, which is my favorite style of trading, I would notice that a lot of times in that current condition that we were in, I noticed that things like major companies and large caps would sell off about 3 to 5%. And if they did so, they always came back. So I would always get alerts on some of my favorite things that would always fall 3 to 5%. Ford, Carnival Cruise Lines was another big one. Microsoft did it a few times, and another one that I did was not energy company, a telecom company, FTR, which is god awful, but it worked. So I would notice that at the end of the day, the close, I would go through and I'd say, okay, this is down 3%, this is down 3%, this fell 4%. If I buy a week later, it's going to come back to exactly where it was. And it worked. At least 8 out of 10 times. But those 2 times it didn't work, I knew I needed to get out and mitigate my losses as quickly as possible. Always buy the dips, but sometimes you just decide you got to cut your losers. But that's basically it. It was just something I wanted to kind of brush over. It's a very useful thing to do, obviously, is identify the patterns. But as you get more into the game and more into trading, you'll be able to identify those patterns much better. You'll find your own patterns and your own little tips and secrets that you enjoy. So, and that work for you and you make money off of. So that's basically it for today. I wanted to get on here and I wanted to talk. And I'm glad you guys listened to me. Today, well, market is obviously done. Let's go ahead and see what kind of stocks I'm watching. Last time I called out the Berkshire Hathaway 200 call, and that did not work. It didn't. It wanted to. Everything was doing fine, and then she sold off between Thursday and then a little bit on Friday. She's still on a small pullback on her 3-month. She's still down 3.5%. So that she wants to get back to 200. She really wants to get back to 200. And speaking of these patterns, I'm starting to notice double and kind of triple bottoms on the 3-month chart around the 189, 191 range. That's a lie. It looks like a double bottom here. 191, 189 range. That seems to be a great place to pick her up. So definitely I would say if you can get her under 192. I hate to say it again, but I'm still watching her. I've actually got a couple of those call options, the 200 calls that expire June 8th. I am on those, so if you did, I hope you didn't take my advice, never do. But if it's something that you were doing or were interested in, I am in it. I am playing that game. I'm not specifically looking for the 200 mark to hit. I'm looking for a quick pop maybe to the 194, 195 range. She closed at 192.30. So I'm looking for a quick pop to like maybe about the 193, 193.50 range is where I'm looking for her to hit between the Monday-Tuesday range, and I'm looking to get out of my contracts. Piled in at 11, I'm just looking to get out at 15. Take me about close to like a 47% profit, something like that, off the top of my head. I'm not the best with percentages, but I will take it. I got 3 of them. Let's play the game. So I am still watching Berkshire. I think it might be time to like really kind of quote unquote stock up on her. So that is me. That is the gluten-free fucking Jason Bessing. I'm going to call it a Friday. I hope everyone has a beautiful weekend. It's June. It's one of my favorite months of the year. Why? I don't know. Because it's a slow month. Nothing happens in June. I love it. Summer's here. It's raining in Florida. I will see you fuckers on Wednesday. Later, guys.